Hi there, and thank you so much for tuning in to our on demand version, breaking down B2B sales into the EU for both goods and services, as well as the 13th Directive. So, this is a part of a series for accountants where we have one final version on the import one stop shop scheme. And you can sign up to that in the link in the description below. My name is Alex Wyatt, and I head up our partnerships team here at Simply VAT, and I'm going to be walking you through today's session. If you do have any specific questions that might pop up throughout today, please feel free to reach out to us at partners@simplyvat.com and we'll be happy to help. So let's start with a little bit of a background about who we are at Simply VAT. We specialize in international VAT compliance for businesses trading cross border, and we handle VAT registrations, the ongoing compliance, consultancy, including VAT rate reviews, and also 13th Directive reclaims. Ultimately, we're here to help. So we work closely with accountants to help their clients as they trade internationally. Most businesses these days we see are trading internationally, whether they're making purchases or sales. So having a partner to act as an extension to your team allows for greater coverage with your clients. For today, we have a flow of topics. So we're going to start with B2B physical transactions, and then we're going to move on to B2B services, and we're going to finish off with the 13th Directive. So today's topic can be quite complex, and I'm completely open to answering any questions that you might have after today's session. So as I mentioned, just reach out to us with your individual cases, and I can make sure that it's clear to digest for you. So let's start out with the really basics, the definition of what a B2B transaction is. So in a B2B transaction, both the supplier and the customer are VAT registered. For the most part, the supplier should be VAT registered when making transactions, but there are some exceptions to the rule, which we're going to cover off a little bit later today. So we're going to start off with the physical transactions. And we see typically two different types of transactions when trading with businesses in the EU. We have intra EU transactions where the supplies of goods are already located in the EU at the point of sale. And then, secondly, we have an import into the EU followed by a consecutive sale to a business in the EU. So we're going to have two different VAT treatments depending on kind of which outcome that the seller is using. So first, we're going to start with the B2B supplies of goods that are already located within the EU at the point of sale. We have the goods being dispatched from a member state where the business is selling the goods and they already have a VAT registration in place as a seller. The goods are then going to be sent cross-border to a business in another EU member state. And as you're making this transaction, the seller is going to have to check to make sure that the business customer's VAT ID is valid on buys. And if the VAT ID is valid, the invoice can be considered an inter-community supply that has zero VAT charged. If the VAT ID is invalid, the VAT charged at the rate of is going to be charged at the rate of where the country at the rate of the country where the transport begins. So where are the goods being shipped from? So this is different to typical B2C transactions where we're going to see that the VAT rate is charged where the end consumer is located. So B2B and B2C transactions have different rules in this case. So we're going to look at our second scenario here where we have goods that are being dispatched from a country outside the EU. The goods are then going to be cleared by the seller who's acting as the importer of record, and that essentially means that they're paying the import duties and taxes as the goods clear through customs. The goods are then going to be sent from the country of clearance to where the business is registered for VAT in that destination country. We then are going to need to check whether or not the business has a valid VAT ID to determine that VAT treatment again. So as you can see here in this scenario, we like to say that there's two types of transactions for this sort of business. First, we have the first one is with the import, and then the second one is the final sale to the buyer. The seller is clearing the goods in a specific member state, and they may require a VAT registration in that country of clearance, and that will allow them to reclaim any import VAT that they've paid. So it's important to note that every intra-EU or every intra-community supply is an intra-community acquisition on the receiving end. So the buyer requires a VAT registration to account for the intra-community acquisition on their VAT return. It's not free of VAT, even though that there's no VAT due to be paid. It's going to be reported as a reverse charge on the VAT return. And the reverse charge is where the reporting responsibility is shifted from the supplier to the customer. So examples of this could be moving your own stock between different EU member states. And so this is considered an intra-community supply and acquisition to yourself. And you would require VAT IDs in both countries to make sure that these are recorded appropriately on the VAT return and the EC sales list. So now that we've covered cross-border B2B transactions, it's important to note that there are different rules for the domestic B2B transactions, and this all depends on the country. Domestic transactions are not exempt from VAT, as sometimes it's commonly thought of. In some countries, there may be a domestic reverse charge applicable for the sale of goods, and this can be in countries like France and Spain. And in those countries where a domestic reverse charge is applicable, it means that you can invoice the buyer as zero VAT, and that buyer will account for this on their VAT return. In other countries like Germany and Poland, there is no domestic reverse charge, and the goods must be charged with VAT and remitted to the tax authorities. So the seller must issue an invoice in this case so that the buyer can reclaim the import VAT on their VAT return. So very much like here in the UK. So a lot of B2B transactions can be considered chain transactions as well, where there's maybe 3 businesses involved. So we have a supplier, a middleman, and an end customer or buyer. This is where the invoicing flow goes from the supplier to the middleman and the middleman to the customer. But the goods flow skips the middleman and goes from the supplier to the customer directly. Situations like this could be triangulation or drop shipping, and drop shipping is quite a generic situation, whereas triangulation requires specific things to be in place in order to use this simplification. So deep diving here on triangulation a little bit further. So triangulation can be used as long as all parties involved have a valid VAT ID in place, and they all must be in different EU member states. Since all are VAT registered, there is no tax that needs to be charged in this specific type of transaction. So company A is going to be dispatching the goods directly to company B, and company A will invoice company B for the intra-community supply to company C. Company B is invoicing C under triangulation. And then B does not declare the acquisition from company A. And company C is reverse charging the VAT on the VAT return. And so this is going to be on the net amount of the invoice from company B. If you need to replay that, please, by all means. It's a bit complex, but that is where we can use the specific triangulation scheme. So since Brexit, UK companies unfortunately can't take advantage of the simplifications of triangulation unless they have an EU VAT ID in place. If the company does have a B2B sale or acquisition, we need to ask a few questions. So, are the goods imported into the EU? If so, by whom? Who's taking on the responsibility of being the importer of record? Next, what is the flow of the goods? And where is the UK business sitting in that chain? Is it company A, B, or C in that last diagram? And finally, we just need to ask, where is the UK business registered for VAT? This is all going to help dictate how to handle the B2B transaction. And again, if you have any specific transactions or cases that you have, please send them across to our team and we'll be able to help. So now we're going to move on to B2B services in the EU. We need to ask a few more questions here when these services are occurring. So first of all, where is the service supplied? So this would be where is the supplier of the service delivering the service? The next question is to whom it is supplied. Is it a VAT registered business, a non-VAT registered business? Next, where is the supplier of the service established, and where is the recipient of the service established? All of these are going to help us determine where the service is taxable and by whom. So depending on the answers to the questions I've just listed, we're going to have two different outcomes to the VAT treatment. So we either have the general rule and we have exceptions to the general rule. The general rule outcome is taxable where the recipient is based. So this means that it's going to be reverse charged on the VAT return of the recipient. Where there is an exception to the general rule, VAT is usually going to be charged in these cases. So let's go through a few of the exceptions to the general rule here. So first we have services provided by an intermediary, services connected to immovable property, the supply of passenger transport, the supply of telecommunication, broadcasting, and electronic services, very much frequently known as TBE services, the supply of admission to specific types of events, restaurant and catering services on ships, trains, boats, etc., hiring a means of transport, and the supply of services to non-taxable persons outside of the community, and also the use and enjoyment rules. So we're going to walk through a few examples of these now and how this works in practice. So we get a lot of questions about warehousing and the VAT treatment on these invoices. So we're going to show a few examples here on how the VAT on services can change depending on a few different changes in the supplier or the recipient of the service. So in the first scenario here, again, we're talking about 3PL warehousing services. It's going to be, in all of these cases, it's going to be supplied to a business. Where is the supplier of the service established? So in this example, the warehouse is in the Netherlands, and the recipient of the service is going to be a UK established business. In this scenario, this service falls outside of the scope of EU VAT, and it's going to be taxable where the recipient is established. So in this case, it's going to be the UK, and it's going to need to be reverse charged by the recipient on the UK VAT return. Going on to the second example here. So we have the supplier, in this case, based in Germany, and the recipient is in France. In this case, it's going to be taxable where the recipient is established. So in this case, it's going to be France. It's going to be reverse charged by the recipient on the French VAT return. Example number 3 here. So in this case, we have the supplier is established in the Czech Republic, and we have the recipient of the service in France. In this case, in this example, it's going to fall under the use and enjoyment rules and will be taxable in the Czech Republic. And if no taxable supplies are carried out, input VAT can be reclaimed on the 13th directive. Now, this case is unique compared to the last case because the warehouse is in Czech Republic and the goods are stored there. And the Czech law, there's an exception here. So where they state warehousing services are covered under the use and enjoyment rules. So that's why there's going to be a different application to VAT in the Czech Republic than there would have been in the last example. And finally, example number 4. So we have a little bit of a different case here. So we're still getting warehousing services, but the seller in this example has a designated space in an Austrian warehouse and 24-hour access to this designated space. So this is the customer is going to be established in Belgium in this example, and this is going to fall under one of the exceptions in connected to immovable property. So there's going to it's going to be taxable in Austria where the warehouse is located. And this is because you have a designated space. It's going to be falling under one of these exceptions to the general rule. So we're going to be easing now our way onto our final topic of the day, which is the 13th Directive. The 13th Directive essentially allows for the refund of VAT for non-established taxable persons. And so what that means is that we have 4 things here. So the taxable person is established outside of the European Union, and they're looking to reclaim input VAT that has been paid already on supplies of goods or services that were acquired within the community, within the EU. Secondly, the member states may limit refunds, and they have specific reciprocity agreements where you may require fiscal representation depending on where the company is established, much like getting VAT registered. They may limit the amount of refunds that you can get. They will all have a minimum requirement. And what's unique here is that every single member state, although we like to think of the European Union as a harmonized tax system, each and every single member state can establish their own processes and their own amounts, including the limits, the times in terms of when they can, how quickly they refund the money. What needs to happen in the applications, and the periods that you can actually reclaim by. So this is important to know that you need to check into each and every single member state where you're trying to reclaim, and that's going to help you and understand whether or not this 13 directive can be applicable for the specific supply. Finally, it excludes the possibility that non-established traders receive more favorable benefits than established traders. So in this case, businesses established within the EU are able to reclaim the input VAT where they're VAT registered. And this 13th directive is saying that even if you don't require a VAT registration because you're not carrying on any taxable supplies, within the EU, you're still able to reclaim the input VAT. So what types of situations warrant using the 13th directive? And I think this really breaks it down for me in terms of, it kind of triggers some ideas in your head of where your clients might be able to start to reclaim input tax. So first is employees traveling for business in the EU, and they're wanting to reclaim any purchase VAT on expenses or any of their trade shows that they're purchasing, etc. Secondly, it can be used in the case of e-commerce businesses, maybe using print-on-demand suppliers within the EU, and they're making no domestic B2C transactions. And maybe this company has a VAT registration and an OS registration where they can actually declare the cross-border transactions on their OS return in a separate country. So in this case, you can actually reclaim the input VAT or the purchase VAT on those print-on-demand items. under the 13th Directive reclaim. And finally, so the import, say if you have an import VAT, you're importing goods, or you have paid for local VAT on specific goods, where actually a VAT registration isn't eligible for a specific business. So this could be in a case where maybe you're importing goods and there is the domestic reverse charge in place. And if there's a domestic reverse charge in place, the business that's importing the goods doesn't actually require a VAT registration, because actually there's no further VAT to be recorded. That's all going to be declared on the end customer's VAT return. So in that case, we could use the 13th Directive to reclaim the import taxes in that scenario. One of the key, there's a few key considerations for the 13th directives that we'd like to set people's expectations around when you're actually putting in an application for a refund. So first of all, there are specific timeframes for the reclaims. So usually 6 months after the end of the period is the deadline for all of these reclaims to be submitted. So this means you can't be going back multiple years. You have to be submitting these regularly. So in the case of if the period was all of 2023, we would have up until June of 2024 to submit all of our reclaim applications in order to get the refund at all. So the next thing is that all tax authorities will have a minimum reclaim amount. So if there's somebody just traveling on business and they have less than a few hundred euros worth of input VAT to reclaim, it's probably not going to be either allowed or worth the reclaim in this scenario. Next, all invoices are going to be checked and verified for the reclaim. So it's important that every single invoice is going to be kept on hand and for a period of time afterwards. Every single invoice needs to be checked, and that tax authorities can have the opportunity to say, no, we don't agree with this specific invoice. You shouldn't have, we're not going to refund this because it shouldn't have been charged with VAT from the get-go. And finally, as I mentioned previously, fiscal representation may be required to reclaim. So if you're established in a non-EU country that requires fiscal representation in that specific EU member state, that's where you're going to need a fiscal rep in order to make the reclaim. And with that, there's going to be additional costs as part of the reclaim process. So we have a few examples here really to put this into practice. So I'm going to read them out here. We have Soap Products LLC. That's going to be based in the USA in this example. And they're sending over their chief product officer and their head salesman to the International Soaps and Suds exhibition in Berlin in Germany. So Soap Products LLC is renting a stand at the trade show, and they're purchasing electricity for the stand, they're renting furniture, they're purchasing catering, they're really going all out for this trade show. They're also, paying for entry tickets, they're paying for the hotel rooms for both employees and their transport, restaurant costs. So all of these things are going to contain German VAT on the invoices. Because the U.S. established company does not provide any taxable supplies in Germany, so they're not actually physically selling the soap at the trade show. They may just be showing off their products for future sales. And they're not going to need a German VAT registration in this scenario. It would be, in this case, they would be able to reclaim their expenses under the 13th Directive. The VAT paid on the expenses would be eligible to the extent that they are business expenses. So any personal expenses, they could be declined by the tax authorities. So let's move on to example number 2 here. We're sticking with Soap Products LLC based in the USA. And this time they are wholesaling their soap products to a distributor in the Netherlands. This distributor, who is actually VAT registered and is established in the Netherlands, requires that that Soap Products LLC is importing their goods DDP into the Netherlands. And DDP means that they're acting as the importer of record and that they are paying the import duties and taxes as the goods clear through customs. Soap Products does not otherwise provide any other taxable supplies within the Netherlands. They're just making this one transaction. So because in the Netherlands, they have a domestic reverse charge rule, and because Soap Products LLC does not provide any taxable supplies in the Netherlands, it's not eligible for a Dutch VAT registration. But because it would incur import VAT as they're clearing the goods through customs, and as a result of declaring the goods DDP, Soap Products would need to lodge a 13th Directive reclaim with the Dutch tax authorities in order to recoup the VAT paid on the imports. And we have one final example here for you with Soap Products LLC. So in this scenario, they're going to be selling goods to private individuals across the EU via their own web shop. Soap Products LLC has registered for the Union OS to account for the distant sales of goods. However, they do not hold stock anywhere because these goods are actually going straight from the supplier directly to the customer. They purchase the goods directly from the manufacturer in Belgium in this scenario, and the soap is sent directly by the manufacturers to the end customers. And since Soap Products LLC does not sell goods locally to Belgian customers, and they're making no other taxable supplies in Belgium, they cannot register for VAT in Belgium. Input the VAT that is going to be charged by the manufacturer to Soap Products will be able to be claimable under the 13th Directive in this scenario as well. So I hope those examples have really helped kind of put it into practice about when these when businesses can use the 13th Directive, and it's something that can be quite good to make sure that businesses aren't losing out on their margins or on their profit in specific situations, so that they can actually get the VAT reclaimed. And that can be a huge difference when we're talking about anywhere between 19 up to 27%, depending on which member state you're importing into or traveling to. We do have a real life success story that we did here at Simply VAT, which we're going to be sharing with people that have signed up to this webinar. But we were able to reclaim over 1 million euros for a company because they're through the 13th Directive reclaims. So, we're talking about large sums of money here that businesses could be losing out on. So it's going to be really, really important to make sure that people are aware about the 13th Directive reclaims and when you can actually use the scheme. One more key kind of takeaway for you on the 13th Directive is that the 13th Directive reclaims can be time consuming and really detail intense. And so there's going to be a fee structure involved with this, and also the VAT isn't going to be refunded right away from the tax authorities. Of course, the tax authorities want to hold on to the money as much as possible. So they're really going to scrutinize all of the detail here on these reclaims, and you may get paid months or years later. And again, it depends on that specific tax authority that you're dealing with. So it's important to set expectations when we're trying to reclaim under this 13th Directive, but it can mean still that you get that money back. As I mentioned, that the process is going to be different in each and every single member state. And yeah, the tax authorities can definitely reject specific invoices. So sometimes the rejection is completely valid as well, such as when an invoice is improperly charged with VAT. So in this case, and we have seen it a lot of times where maybe a smaller EU supplier is not really up to date with the rules and how to charge VAT. In this case, you need to go back to the supplier and get the invoice reissued and the VAT refunded. Now, of course, if it is a vendor that maybe has a small team and it's a lot of work to do, um, they're not going to like doing this. So make sure that the invoices that are coming through maybe any purchases, acquisitions of goods or services, you're making sure that they are being charged the correct rate of VAT, or with the correct type of VAT simplification, so that you don't run into this scenario where you actually end up not being able to reclaim, or they make it really difficult for you to get that money back. So that brings us to the end of today's sessions. As I mentioned, if you have any questions, I'd love to answer them. If you have any specific cases, we're happy to talk through them on a call, and really get into the detail for you to make sure that you're helping your clients continue to trade internationally, compliantly, and to make sure that they're getting the best bang for their buck as well. So we're going to be reaching out to everyone individually. But if you have any questions, you can reach out to partners@simplyvat.com. And that is where you'll be able to get through directly to myself or one of my colleagues, and we're going to be able to help you out from there. So I just want to thank you, everyone, for tuning in today to this topic. As I mentioned, it has been quite exciting, quite in depth, if you will. But I'm really hoping that you guys took away a lot. If you want to sign up to the next session, as I mentioned, it's the Import One-Stop Shop scheme. This Import One-Stop Shop scheme is it's a fun scheme for businesses trading B2C from outside of the EU. And if that's something that you're interested in, then please make sure you sign up in the link in the description. And otherwise, I look forward to speaking with you later on. Thank you so much for your time.